Hello, everyone. We'll get started here shortly. I'll let everybody log in here for a second. Well, good morning, everyone, and welcome back to another Box monthly webinar. My name is Scott Ebeling. I am Director of Pricing and Strategic Solutions, and I'm joined here today by Allie Coldewey, our Senior Pricing Analyst.
Good morning, everybody.
Hi, Allie. I'm gonna let Allie take it away here with the agenda, and they go over some of the background on Box. Go ahead, Allie.
Perfect. So first of all, we'll be reviewing some facts about Box. Next, we'll get into our market update, courtesy of Scott Ebeling. We'll then touch on our ESG overview. This webinar is the latest installment in our environmental, social, and governance portfolio. So we're excited to share some developments with you guys. We'll then go into an overview. It's going to be really 10,000 foot, but we're excited to talk about on-site energy efficiency and some of our options there. And then, if assuming we have time, we'll get into some Q&A and overview of our strategic solutions offering.
All right, thank you, Allie.
First off, we'll talk a little bit about Box. For anybody who isn't already familiar with us, please feel free to reach out to us. We've got a really awesome account management team that's waiting to talk to you. Across those account managers and our broker partners, Box is responsible for over 12 billion kilowatt hours, 214 million therms, and over 63,000 accounts. We probably actually got to update those numbers. I think that those probably are a little bit higher at this point in the year.
We'll work on that next month. Good
yes,
call.
Exactly. We are licensed in all deregulated markets. So you'll see here in the green where we have both natural gas, we have natural gas options available. We have both power and gas options available in the blue. And then our gray states that are a little bit darker with stripes there are states with limited availability. In most cases, that limited availability is very, very large commercial transport or interruptible natural gas accounts. We do have resources and partners available to serve in these markets, but they are not served by, for example, the 20 to 50 that we have in other markets. So if you have opportunity in these markets, again, feel free to reach out to us. We've got a fantastic account management team that's waiting to help with any opportunities here.
Yeah, I'd like to add one more thing to that too. This map here is just for the deregulated electricity and natural gas. We can sell RECs in every state. We can do energy efficiency projects, and we got providers, and we'll go into this slightly here today, in almost every state. So our reach can go farther out there. In fact, at CUNY Solar, for instance, we're gonna have some stuff in Minnesota even. So we're gonna have some other states in here, but this is just really for the base electric procurement. But if you got accounts or customers that go into some of these other states, we can offer some things there as well.
Absolutely. A lot of the efficiency offerings, or for example, I think last month our webinar focused on our utility invoice management and data analytics platform, Utility Data Box. That's a tool that's available in any of the 50 states. So just so you guys know. Next, I think, is our supplier slide. So we are partnered with 90+ top energy suppliers. You'll see most of the big names here: Constellation, Direct Energy, NG, Champion, Shell. And we've also got some smaller regional players as well, either smaller brands that are focused more on the small medium space or the mass market space, or suppliers who are just regional experts in the natural gas markets that they serve. So regardless of where your customers are, if they are in a deregulated territory, we have supplier partners who are available.
Well, thanks, Ellie. I'll go now into a little bit of market update, and then we'll get back to Ellie talking about the more exciting stuff, the energy efficiency side of it. So first of all, again, just want to go over these slides. This is just importance of natural gas prices, and we'll quickly go over this. We've gone this over a couple of times, but if you're new to this, this just shows you why the correlation between natural gas and power prices. And here's a chart with West Hub in PJM, and here's a chart with ERCOT. I normalized February 21 because that was an absolute crazy time and kind of a different situation there. But in general, these over 12 months moving averages have just kind of like stayed aligned here and moved in tandem really heavily, because natural gas is now what's on margin almost every region in the country as far as the fuel that's on margin and the generation that's on the margin, so it's setting the pricing. So with that, that's why we talk about natural gas prices. And so with that, let's just look at the chart here. This is one of the more volatile periods I've seen definitely in the last 13, 14 years, but really has, just been kind of a crazy summer. I mean, we look at this, we shot up here pre-summer up to this $6.50. This is prices for the 12-month forward curve from the script would be like September 22 to August 23, and the next 12 months. And so you see we have these dips, and we just have these gyrations. We got up to like almost, up near $8. We got in the $9.50 actually in the front month gas, but over the 12-month strip, and then bam, it shot right back down and to this little $5 area, and then it shot back up here, back in like mid-late July up to 7, and we're kind of hovering around this $6.50 area. And this is just really just heavily moves just off the weather, really hot weather. The Freeport situation, which we'll talk about here in a few minutes, is really from coming off and looking like things going to be off only for a month to being off to midwinter, and now they're saying early October, which we'll get into here in a second. But it's really kind of a lot of movements there. And this is a chart here. This is kind of that fair spread here, March 23 to April 23. It shows the difference between winter and really, because it's like almost two different kind of markets, really kind of what's happening in the front to get us through the winter, and like, are we gonna have enough gas, to after that when gas starts filling up again and this spread goes in and out based off of that fear. This is kind of what really measured it. And we were down here in this 96 cent area last time we talked a month ago, and now we're kind of heading back up to this $1.50 in its upper ranges. And you'll see here in the curve that it's generally all the movement in the past month really has been in that 12-month period. If you look here, this is just hardly moved anything past April 23. The big movement's been just really in the front. Nothing really fundamentally has changed for this market here in the back for the fundamentals here. And now just kind of like showing you kind of what's happened here, where prices are and what's happened the past month. Gas, forward gas here for 2023 is at $5.51. It kind of ticks down in the 4.5 area. Like I said, not a huge amount of movement here. And ERCOT and PGM still in that 70, 60, 70, $80 range. Big movements here in 2023, but in the back part here, not much movement. In fact, PGM is down, even though gas is up a little bit. PGM is down 24, 25. Really mostly because where the summer LPs have come in at, not super strong. And now we just talked a little about natural gas storage. And the injections have been below last year and relatively anemic, and we've had surprises, the upside, surprises, the downside versus estimates. But in general here, we're still just on this line here, hovering around this bottom, bottom levels here, which, isn't going to put us in a great situation for winter and to be fully beefed up there in case there's any issues with a really cold winter or below normal winter, not even really cold. But here's kind of estimates based off of historical builds from this time till the start of the withdrawal season, which is November 1st. And if we hit the 5-year maximum for a build between now and then, we hit 3552, 3249, 3174. So, we're probably going to come somewhere between this average and minimum because we're right now hovering right above the minimum. And, relatively speaking, because the weather is cooling off, if we normalize in the weather, we're going to be there. We still have Freeport down for a little bit. And here's the weather right here. This just shows you kind of the beginning of the last, beginning to the end of and last half of the month of August. And there is relief to you, everybody down there in Texas a little bit. You're not gonna see hundreds every day. You're maybe start seeing 90s. But also really the main thing is, yes, it's warm out here, but this is a big population area. This is really where excess gas regeneration and stuff will be used. And we're cooling off. And these normals are actually the average temperatures. So the difference between the average temperatures are dropping as well. That peaks out the last week of July. So, we're talking here almost perfect weather. If this kind of stays around, we're talking that like upper 70s for this kind of upper population area, Chicago out to the East Coast kind of area. So we're, should be better injections in the gas if that stays true. Now, this is 11-15-day forecast. So we have no idea what's going to happen after that. Anything you get really past that 6 to 10 day gets really dicey to really predict and get a hold on. So just want to put that out there. And that's why, go back to that. That's why I have the question mark right there. So production, yes, it's stronger. Sorry, I didn't update this little part here, but whoops. But we are at right around 96.5 right now, 96.4. And, so we're still below, but it has picked up. This has picked up. That's a good sign. We've had more rigs in there. We had picked this up. And so we are probably going to come close to that. The wave trajectory is here. Definitely by the end of the year, we'll have that. But they expected this as an average for the year. So we obviously aren't averaging that for the year. And if anything, we're expected to be up near 100 by the forecasts were for 100 by probably spring of next year, which I don't think is necessarily going to be happening. Freeport is back for the start of the playoffs. Yes, thought that was pretty funny because it's like somebody's injured and they're like, are they going to be back? Are they going to be there? Maybe they make the final series if the team makes it. No, they'll be back. It's going to be start of the playoffs. And what I mean by the playoffs, that means by the start of the winter withdrawal season. And this is going to put 2 BCF of gas on. This was expected to come on in October, in midwinter previously from last month. Originally it was expected 30 days and then it got switched to midwinter and now it looks like October. So this is going to be really helpful. Not helpful, I'm sorry. It's going to be taking gas out. It's going to be for the kind of bullish side of it and keeping gas kind of in check, and the storage levels down there, lower levels, is going to keep at those levels. And really, LNG exports expected to be at capacity through 2023. This is capacity right now, around this 13 BCF. We're hitting around 10.5 to 11 right now. So we're going to get this 2 back up here, because this will definitely go. And we're going to have another 1 to 2 BCF throwing through the year. It's going to start around like 1 around mid-year, on a 2 at end of year. So more gas even going out next year, and it will go out because it's Europe. Yes, Europe is in trouble. This chart was eye-popping to me. We knew it, but it's different to see the picture of it. This is the daily pipeline exports from Russia to Europe. They did hit this is a 40-year low right here. This is what's flowing. I mean, Russia really has Europe by the neck on this. And to top it all with it as well, I just reading the other day about rivers are drying up there and it's reducing coal shipments. So you're having that, less gas from Russia. LNG imports are limited as in the rest of the world. We're pretty much at capacity, and it takes a couple years to get these things built, and billions and billions of dollars. So it can't just be something we turn on overnight. German 12-month forward power prices over $400 a megawatt hour. Let that sink in. Yeah, that's what they are at. And winter natural gas is now over $60. So this is something that matters to us. And why does it matter? Because U.S. cold winter is going to equal competition with LNG. If we're heading up near lows, we're going to be hitting up on that. We're going to be competing to take gas out from being shipped out. And that's the scenario. That's what sets the fear in here. So we're going to be really careful if there's definitely an early cold winter. And I would definitely want to have something hedged by November for sure. But early October, even that matter. And also, just going back on this as well, the competition for LNG does happen in NEPOOL. It's hard to get gas up to there, so the way to get gas really need it at its most. This is why basis gas, when winter prices are so high out there, is because they're going to be competing for this LNG shipments with Europe if they need to import any LNG in there. So that it does matter there. There is actually competition for the LNG up there for sure, no matter what. Some other market developments. There's a shortage of transformers. And this matters to, one, the stability of the infrastructure of the grid, because these aren't getting replaced as much, to if you're a kind of customer looking to mine Bitcoin, for instance, and they need to increase the capabilities of that place from that was a 1 megawatt place to a 10, 15 megawatt place, you're going to need to transfer new transformers. So there's a shortage of these right now, and looks like it could be a 12-month backlog. And this is going to be a growing story. We'll all see this here as it goes through. Also, ERCOT LMPs, relatively weak considering the heat. I mean, I think we averaged 120 last month, and that's a lot, but it's not. For gas that averaged around $6.5, $7 and 100-degree temperatures every day, it's not too bad. I think the wind really helped out there, because the wind was not, and some of the days we've had super high LMPs in the past, in the summer, the wind just died down. The wind was fairly robust considering what it typically is. Another thing I want to touch on here is counterparty risk. Just be careful when choosing your supplier, or helping your customer choose a supplier of the counterparty risk. With these volatile markets, we are seeing growing issues with companies kind of not hedged and being exposed with their hedges, their lack of hedges or improper hedges on the other side of it. So you got to remember, if the supplier goes out of business, and that contract pretty much gets null and void, the customer now has to buy at higher prices. So if this market goes crazy from here, and say you hedged gas at $6 and the market goes to 12 and the company goes under, you got to buy gas now at $12 when you thought you were buying at 6. Same with power, similar sort of thing. You bought at 50 and the power price goes to 70, you now got to buy at 70. There's no other way around it. You are in the back of the line as far as trying to take assets or in the bankruptcy kind of court. Inflation Reduction Act, we're still digesting this a little bit, and we're going to have more on this in the next webinar. I'll have a little slide on this, but really when it comes down to expanded tax credits with stacking, meaning that you can now stack these in the different incentives where there's upwards over 50% now you can get if you do it right. There's also some battery storage incentives, and the good thing too for natural gas purposes, especially easier permitting of pipelines, etc. That seems a little bit of more of a handshake agreement, that part, but we'll see, and we're gonna dig into this a little bit more going forward. Again, strategies, be disciplined. Again, you're not taking a long position when you buy something. You're actually covering a short position. You expect to be in business for the next 5 years. You have nothing hedged, and you are short because you're going to need energy, obviously, to keep your operations running, to keep manufacturing what you manufacture, to keep your lights on, and be able to people to see what you're selling. If you have an office building for people to work and use computers, you need all that. So you're covering a short position. So manage that as if you would a short position, which is often a dangerous position. So with that, I would set at least set some strike prices, so you can participate in a market dip, but also kind of understand what your level is, the highest you could pay. This market seems to be volatile, but we could also have a dip here. We also oftentimes get down to somewhat of a low right around Labor Day area through mid-September. So be ready to jump on that if that does happen. And hedge something, have something on. I mean, if you have nothing, put 25% position on. All of our suppliers are able to do blocks or load filing hedges on percentage kind of basis. So we can work with you guys on strategizing on those procurement opportunities. All right, well, to catch up a breath here now, and I'll hand this over to Allie, and she can talk some more about our ESG offerings and getting into details on the HVAC. Go ahead.
Perfect, thank you, Scott. Looks like we're not quite out of the woods yet with some of the high natural gas prices. And as we're getting closer to winter, it's definitely something more companies are going to need to pay attention to if they have not already started throughout this summer. Moving into ESG, just briefly for those of us who haven't joined this webinar before, what is ESG? ESG is environmental, social, and governance criteria. So this is criteria set forth by stakeholders. Those are investors, that's a company's board, or potentially a company can be looking at what their customers are looking for out of the brands that they buy from or the vendors that they choose. In particular, we are focused on the environmental side of this. So obviously, being an energy company, we are concerned with energy usage. The environmental side pertains to carbon emissions, green energy initiatives, sustainability, and energy efficiency. All of those pieces are things that will factor into someone's ESG score or into their carbon emission score, both of which are items that are trackable on our utility data box platform. Just by the by, I want to trying to plug that again. But really, truly, these goals, these standards, and this criteria are items that are receiving more and more attention from whether that's the company's management, their board, or customers. So becoming more and more important here. Moving into our on-site energy efficiency overview, I'm really, really excited to share this with you guys. We've done past webinars on renewable generation, on community solar, on utility data box, and kind of an overview of our suite. We're now getting into some of the pieces that can actually plug in behind a customer's meter. So starting off, we have LED lighting and controls. That pertains to everything from bulb replacement, whether you're subbing a 40-watt fluorescent light for a 7-watt LED, whether you're retrofitting an entire fixture to make that fixture more efficient, or a full lighting design project. That can also be combined with light and movement sensors to make those devices themselves even more efficient. Oftentimes, those controls will also integrate with any sort of cloud system or building management or automation systems, which we'll get into in a minute. The second piece of this is HVAC and smart thermostats. So this is programmable technology that can help mitigate energy consumption and demand. This, again, can plug into any building management system, but we actually do have some options on both of these, LED lighting and HVAC and smart thermostats. In particular, today we're going to be focusing on a 10,000-foot overview of HVAC and smart thermostats, so you'll get to hear more about that in just a minute. The next piece of this is building management systems. So these are cloud-based applications that help to automate behavior. They track patterns and alert the customers to any issues that are happening on site. A lot of manufacturers have these, a lot of commercial real estate buildings or multifamily businesses have these types of setups that enable their management to remotely control the building or remotely monitor the building. As we said with Utility Data Box, you can't manage what you aren't tracking. So these are very important in terms of seeing what's actually going on site for everything that's actually consuming electricity. And then last but certainly not least, we have on-site generation and battery. We touched on this a little bit in, I think, our May webinar when we went into on-site generation and on-site solar. But I wanted to plug it in here again because it's so relevant to our energy efficiency. This is where customers can install on-site generators that enables resiliency against future price spikes or blackouts. Now, each of these technologies will influence the customer's bill by reducing the actual number of kilowatt hours that go through the meter. So the opportunities for savings by employing any of these technologies, or even by combining them, are in general relative to the opportunity for savings behind a procurement opportunity. They're relatively large because they eliminate costs from both the supply and delivery sides of the bill, which is really exciting. The customer also has options to be able to show their local utility or the federal government that they are reducing their consumption, that they are becoming a more efficient facility. And so oftentimes there are rebates or incentives available for them as well. As far as HVAC and smart thermostats go, we'll review that. The goal of these technologies is to optimize the costs associated with heating and cooling. This actually is a great way for small and medium business customers to participate in demand response or other curtailment incentive products. This is an awesome offer for anybody who has wanted to be more efficient, who has wanted to take a little bit more control of their electricity and power bill, or even their gas bill, and be able to optimize that cost. We do have additional options, not just thermostats. We do have thermostats available, in particular in New York and in Texas. Those are two of Box's largest markets. So I know we have a lot of brokers that are active in those territories. We've got additional options available for customers with refrigerators or chillers. Those are going to be supermarkets, restaurants, snow cone vendors, what have you. The savings on these products can range from 15% to 20% of the overall electricity spend, depending on the customer. So if your customer has chillers, refrigerators, if we're talking about a restaurant in which we can plug in a smart thermostat and some of the tech that pairs with those refrigerated items, that's something that can be on the 20% side. If it's just a commercial building where we're looking at HVAC, but they want to keep it at a particular temperature all the time, that can also be on the higher side. With these, brokers, please be careful. If we're plugging in this technology, we do need to be aware of the customer's supplier. If we are plugging in that technology separate from a procurement agreement or a supply agreement, then we may need to alert them that there may be some changes coming down the pipe that could fall under their material change clauses. So this is another good reason to work with Box, is because we can get ahead of that and we can really help the customer in that respect.
Awesome, thanks, Allie. I mean, this is again, I think this is just such a another service we're now providing our brokers and consultants that we can help and we can facilitate getting these deals done. We've partnered up. We're going to be unleashing this stuff in the latter half of this month. We'll be seeing more announcements coming from business development team as far as these services, and we're really excited to offer these because really I think everyone has, everyone can talk about, hey, let's for a couple of things. One is costs are higher, so here's a way to reduce costs. Number one, it's a great entryway into talking with customers who are being hit by higher costs. Okay, I can find a way to actually lower this cost to take some of that burden from you. And secondly, really this is where ESG starts. This is where environmental, the savings and the environmental issues start. It's just by providing these. And there's also going to be, I think there's some tax incentives involved in this, especially for homeowners. This is, I think, I read this stuff. I think there's like almost a little over $1,000 a year you can now use a year, not just a one-time thing, but $1,000 a year homeowners can now use for energy efficiency stuff in the house. And it can be like insulation, new windows, things like that. So heat pumps, but some of these things are going to transfer over to businesses as well. So we're here, we're excited to help you guys out, and we'll be seeing more of this stuff. I'm looking forward to having a conversation with everybody. So with that, let's get over to some questions. And the first one here, I believe, is for you, Allie, on this, and it's really, how do we get started with these energy efficiency? Who do we contact? How do we get started?
Great question. We have a team of account managers, sales coordinators, and account manager associates who are all available to help you guys through this process, available to educate you guys whether you're interested in LED lighting, some of these HVAC options. We have a team of suppliers that we can price with, and that we can where we can integrate some of these options. A lot of these options are billable and can be financed through a supplier bill. So if this is something that you guys are interested in, absolutely reach out to our sales team, our account managers. They're awesome, and they would love to help with some of these projects.
Awesome, thanks, Allie. And we have time for one more question here. And somebody wants to know, what is the Jones Act and how does that impact energy prices? That's a great question. And probably whoever asking, the person asking this question probably saw some headlines on this, and it's a really good question, and it's something you'll probably hear more of this winter, especially if we do have high prices, especially out there in NEPOL, because the Jones Act is basically, it was like some sort of protectionist measure somewhere, I think in the 1920s, I don't know, lost my history, memory the history of it, but 1920s were basically, if shipments going back from U.S. ports had to be U.S. flagged vessels, and a flagged vessel meaning it was something that was built, owned, operated by U.S. Citizens, permanent, whatever. It's just kind of goes with that. So basically, in a nutshell, what it means is for oil and natural gas, because you can't ship something from a U.S. port to another U.S. port unless it's an actual U.S. owned and operated and built ship. So you're seeing this a little bit in the crude oil, so being shipped to different refineries, but you'll see this in LNG possibly because you can't necessarily ship something from a port down in the Gulf Coast out to Massachusetts and the Cove Point, for instance, Maryland, things like that. So you basically that's what that means, and it means that right now we can't do that. It means potentially higher prices. This is something that is being discussed about, kind of eliminating or changing in the U.S. Congress. So that's that. That was a great question. That was one of the better ones I've seen lately. And so now I just want to go talk a little about strategic solutions here. And again, here's everything we now are providing. You'll see this here. And again, just want to go into this. This is stuff that we're here to help you guys on, and we provide these services really to help you, one, be a better broker, consultant, and provide more services, but also have something else to talk to the customer about, better retention at that point. But really, and this is the best thing, and I talk to a lot of consultants out there, the ones that are most successful are the ones that are leading with something besides procurement. So they're leading with one of these other things. I talked to one that was leading with, you know, some of the modules that we have in our utility data box. I talked to another one that was leading with really kind of the demand response. You know, sustainability, leading with that, energy efficiency, leading with that. That's a great one right now, because you say, hey, I understand you have higher prices, you might be contract with somebody else right now, but I can help you immediately right now with helping you with some energy efficiency stuff, and we can start saving some money right away. And then we can talk later about procurement, but you build the trust first. So we're building this stuff to help you out and help your business. That's our intent and our purpose. Hopefully you guys are finding value in that. Secondly, or lastly, I guess, because we're near the end of this webinar, I'm going to go to utility data box again. Yes, we're going to talk about this. This is something that is, you know, relatively all these things that we offer on here. We're here to bring demos to you guys and do them, but even that, you don't really need a demo, because just get an account signed up in this. Every broker, every consultant, sign up an account. We'll get you on here. And these first 100 accounts we sign up, in fact, I think we've been having quite a few of them here already. There's limited supply, but we might even open up to another 100. They're free. I mean, just put it on here. It's free. Once it's in here, it's free for life. As long as you're going through a box on this, it is free for life. We'll keep that account on there for free, but that's how you're going to get to learn this thing, because we really feel this is something that's going to not only, you know, make you smarter about your customers and their usage and help them out, but they're gonna look so much smarter going in with these reports, how quickly it is. You can put your own logo on there, and focus energy budgets. This isn't necessarily you have to like tell the customer and sell the customer on. This is something we're trying to sell to you guys on to use to help you guys retain business more, get new business. Like I said, some people are using these, like the sustainability module, to win over customers and get them ones that are like kind of focused in that area. This is key stuff to use. I mean, let's utilize this. But it's really simple. It's free. All we need is just a customer's, you know, login and password information for their utility and their supplier, their LDC and their supplier. Boom, it's done. Everything on this automatic comes in, and 2 years worth of data comes in there. We'll get that in there. So work with your account executives on this, your account managers on this to get situated. It's really simple. You just call the customer up, ask them, hey, I want to like be able to analyze your usage data and come up with some nice reports for you guys. I just need your information here on your logins. You know, they'll give it to you, because what are you going to pay their bill for them? That's about all you can really do with that kind of information. So other than this stuff, so might as well ask to help them, and it's going to help you. That's all I have. Anything else, Ellie?
Actually, yeah, I wanted to highlight on the utility data box and our features there. If you would like a demo, we're happy to set that up. We're happy to do that on an individual basis. If there's any of these modules that you'd like to see a little bit more of, or if you perhaps missed the live demo that we did on our webinar, I think last month, feel free to reach out to your account managers. They'll get in contact with me or another member of our team, and we'll be able to set up a one-on-one so that we can explore that with you. The other thing is, I think we were talking on our Monday stand-up about going back to basics. And I just wanted to hit on the fact that all of these pieces, whether it's efficiency, whether it's utility data box, all of these are solving really significant pain points for your customers, whether it's streamlining their billing process or being able to pull the most recent energy bill without having to bother them. All of this is in service to the customer. It's solving a problem that maybe we don't have full insight to, but once you mention it, it's, oh my gosh, this has been such a headache for me over the last, 6 months, 2 years, what have you. So these are all things that are really, really helpful for your customer. And it's good to start having these conversations, whether it's around some of the on-site efficiency pieces, utility data box. It doesn't hurt to ask.
Thanks, Allie. That's great. It's great information there. And well, that's it. That's all we have. Again, like I said, if you have any questions, contact your account manager. We can get in contact with us. And we are looking forward to talking to you guys again next month. We'll get the date out there within the next few days. And there will be a recording of this, by the way, sent as well. So if you want to review this or send this off to others, feel free to do so. Have a great day, everybody.
Thanks, guys. Have a good one.